Aloha everyone, Joshua Hayes at BigWaveTrading.com coming to you with the overall stock market wrap-up following Wednesday's session. The market is in a full-on rollover mode now. We broke and held these lows right here, for instance on the Dow Jones Industrial Average. As you can see, the RSI line has rolled over below the 50 line, heading towards the 30 level. Until it goes below the 30 level, I would not even be interested in looking for a bounce in any bounce attempt, barring any kind of huge accumulation and clear bullish moves, breakouts by leading stocks. Those are stocks that I consider with EPS and relative strength ratings in Investors Business Daily over 70 to 80, whatever. It's all arbitrary to who thinks what and when and where, which rules camps some people are using nowadays. But bottom line is there needs to be some kind of technical and fundamental leadership. Until they start showing up again, I'm on the sidelines. Once again today, a lot of my sell stops hit. A lot of 50%ers, about a handful and a half, all of them, leaving all of them with gains. But at the same time, I had about a handful and a half of full sell stops also hit on positions, leaving all those with tiny losses, except for PFPT, a little bit larger loss than I would have wanted, when a little bit bigger in it since it was an earnings winner and thought this market might have had a chance of having some follow through. But it's just, the past week, it's just completely turned terrible for the overall market. But as you see here with the industrial average, rolling over, heading towards that 200-day moving average. That's my next line in the sand as it kind of coincides with this support level. But MACD, RSI, in full confirmation of that index weakness. S&P 500, full-on rollover mode in effect. 200-day moving average is my first logical area of support. Start looking for it to happen around there. You can see it happened last time post-Brexit. MACD in full rollover mode, hitting new lows. You know what that means. That's not good. We're oversold, but we continue to sell off. Not good. Some possible good news short term. RSI is getting near 30 on the S&P 500. So we can look for a bounce here, but unless we bounce on huge volume, we're going to probably need to hit more new lows. And then what we're going to want to see is positive divergence in the RSI and MACD oscillators before we get too excited about anything. But the industrial average and S&P 500 doesn't look good. Look at the NASDAQ 100, full-on rollover mode also. RSI getting to 30. MACD, continues to break to those new lows. First level support is back here following that September 9th sell-off. If not, 200-day moving average, and that's far away. These technical conditions that I'm showing you, this rollover, the breakdown in leading stocks, everything points to a possible short-term major quick correction and or a crash, even though it's never happened in November before. The only positive is that if I need to pull this up, the bank stocks are holding up still above the 50-day moving average, but the RSI line is back below 50. The MACD line's rolling over. If these banks catch up to the market, look out below. The NASDAQ, as you can see, similar situation, closer to those breaking those lows, but still not quite there yet. I expect those lows to not hold. 200-day moving average is my next logical area of support. It would also coincide with about this gap up and breakout level right here. So whenever we broke out to new highs in June, so we'll see if that comes into play. But that's where I'm looking for our next level of support. And the main chart that I want to go over is the Russell 2000. We were already near oversold when we broke down. Then following that, MACD broke to new lows and kept heading lower. I told everybody that the last time that happened was back in January, and going back here to show once again price broke to a new low. Shortly after that, MACD broke to a new low and then ran to extremely low levels, and you can see what happened to the Russell 2000. Then once again, we got oversold, as you can see on the RSI, but we didn't bounce and hold that until we retested and broke to new lows. Then we rallied with MACD and RSI showing positive divergence. So it's good that we're oversold below 30 on the Russell 2000. Bad news is MACD is still racing lower. Next level of support for MACD is in this area here. So if we're going to do a kind of a measured move based on January to now, we're kind of right here in the sell-off, which means we have this much of a leg lower to go down. So we're nowhere near in the clear. I have a new hedge position again this evening, and I have an add to a current hedge position, and those are the only two quality signals. I also got a speculative swing trade oversold RSI long signal that I'll also try to play, but I'll go over that in my video lesson to members. But for everyone else, this market still not in a situation where you want to buy the bounce. I was asked last night on StockTwits if the bounce intraday near the end of the day yesterday was buyable. I said no. I'm going to stick to that thesis. 200-day moving average test possibly coming up. Aloha.